Good morning, good afternoon, good evening. We're back with another weekly watch list heading into a very major week, given the fact that we have FOMC on Wednesday and Jay Powell will speak Wednesday after the meeting. So obviously we can expect some volatility this week, but let's go ahead and jump into the weekly watch list, things I'm looking at both to the long side and to the short side. So first we want to start with SPY. Obviously the overall market on the weekly time frame did put in a very bearish engulfing on the weekly, and it did finally break down from that support. So at this point, my projection is SPY will go to around the 330 mark, probably by year end. All right, maybe it's March of 2023, but I do expect 330 to be the next major level. Now going into this week, if we zoom in, you can see we did put in a hammer candle on Friday, and we were able to put in higher volume. With that being said, I do anticipate that there is going to be a short-term bounce on the market that pushes us back to potentially retest this support. Now, at that point, it's going to be very crucial. Do we see support turn to resistance, where we get something like this and then we get continuation? Are we able to reclaim this? And then if we are, we have a gap to fill up. The highest probability is for us to potentially do one of two things. We might fade into the gap, all right, a little bit further down, and then bounce back. Or we could start our bounce now, bounce back, and then commence further to the downside. Personally, I think that we are working our way down to the 330 level, and a retest of 395 will get me very interested in playing more short sells. Now, one thing that I'm also watching for is if we throw in a parallel channel here, there is potential that we have touched that bottom of the channel, and now's our time to bounce back. So if we are able to reclaim that support, once again, the channel highs into that gap fill is the target. So this week, I do expect there to be a bounce back for the overall market. As of right now, everything on a high time frame still points down, okay? So be careful if you are wanting to play any longs, as the high time frame looks very weak. So we'll keep an eye on this retest of support to see what happens from there. So let's go over to the Qs now. Qs are putting in a very similar chart, just a SPY. They are just channeling down currently. We did break our support with a bearish engulfing, and you can see how high a volume we had. But if we zoom in on the daily, we have a very similar setup to SPY. We have a hammer candle with higher volume. If we do get a bounce, we could bounce back to support, see what happens from there. If we can get through there, we do have a gap to fill up. And then once again, that is our overhead resistance line that is continuing to walk price down. So we'll keep an eye on it. I do expect, like just with SPY, I do expect there to be a short-term bounce on the market. And we'll be looking at around 297. 296 range to potentially enter new shorts if we turn this previous support into resistance. Same thing on IWM. The only major thing here is this has not closed below its support. So if we do get a bounce, I do anticipate that IWM will lead the market in that bounce. If we do break down, I expect IWM to lead that breakdown next as well, because they haven't concluded their breakdown of support. So IWM is really interesting to me. If we do get a bounce, that's probably what I'll be looking at. You can see there's no gaps to fill to the downside on IWM, but we'll see if we get that bounce back. Gap to fill at 180, another gap to fill at 186 to 188. But that's kind of where we're at on the overall indices. Once again, still a very bearish engulfing type of candle. You can see we came back, touched the 50 on RSI and rejected. So everything still points down, but it is holding its support, as you can see, in comparison to SPY or the Qs. So let's go ahead and jump into a few stocks that I'm looking at going into this week and to play as potential swing trades that I might take the entries on this week as well. The first one is CrowdStrike. Okay, CrowdStrike. So CrowdStrike, we have been watching. I did play this previously off of this breakdown, and our target was around the 168 level based on this candle low. But at the current moment, you can see that on the weekly, we are in a big old channel. All right, we are being walked down in this channel. There is a bearish engulfing. The next leg down should put us around this 101 level, potentially back down to 97. So CrowdStrike is definitely one I'm going to be watching for further downside. You can see the 921 EMAs are still crossing to the downside. So high time frames, I like this as a short. This is going to be a swing, probably, looking at year end with the target of about $100. So there's potential for about 40% downside on CrowdStrike, and that's one I'm going to be looking at to enter this week. Now let's zoom in, look at the daily chart. On the daily, we are potentially back down to support. You can see we bounced off of here once. Are we going to bounce off of here again? If we do, we have a nice gap to fill, 187. And you can see that will pretty much line up with the 921 EMAs to the downside as well. So if we do get that bounce back, I might look to take some short sell entries around that 178 level, given the fact of that's our gap fill at this point. So I'm going to keep an eye on it. I do anticipate on taking a position in this name over the next few weeks. I will watch to see what this bounce back looks like if we do get one at all. Do we get one back to the 921 EMAs on the weekly? Do we get them just back on the daily? What happens here? But this is a potential for a double bottom setup. If we do break down lower, the next major area of potential support is around 162 to 163. So once again, everything on this points down. If we do get a bounce back, I will look to enter fresh shorts to the downside, but longer term, I am anticipating CrowdStrike to return to about the $100 level over the next few months. Same exact thing. We weren't able to clear the 50 RSI. We bounced back, smacked the 50 RSI, and we're rolling back over, which shows us that there is further downside to come on CrowdStrike. So that is our first stock that I'll be watching this week. The next stock is Costco. On a weekly time frame, you can see we are in a clean uptrend, with our next potential support around the 450 level. But you also can see on the weekly that we are putting in a very clean head and shoulders pattern at the current moment. If we are able to bounce back, I will be keeping my close eye on around the 413 to 415 level, because that would pull back to our prior support, potentially turning to resistance. Now, if we zoom in, the daily chart does still show that it's bearish, just like everything else. It is channeling down, okay? So if we do get a bounce back and we throw a channel in here, there is potential that we either bounce back to the midline around 513 or we bounce back to the highs around 525 before continuing our next leg down. But Costco does look good for further continuation to the downside for a potential retest of about that 440s, 450s level over the next month. You can see there is high volume. It is starting to break that 50 RSI, and you can see it is consistently putting in lower highs on RSI, which is telling us there's further continuation on this name. If we want to put in another trend line, you can see we have broken our support on RSI as well. So everything about this tells me that we should come down to revisit the 450 level over the next month or so. So those are two bearish setups that I'm looking for. The third bearish setup that I'm going to look at is Alibaba. So we talked about this on stream, and we also talked about this last few weeks, and we've been watching this consolidation period. All right. We've had rising support and we've had lower highs. At this point, we have officially broken down. So once again, our target's the gap fill, which would put us around 84.30, which we've already kind of rolled into. But if we are unable to reclaim the prior high or the prior support around $89, we could be starting our next leg down on Chinese names as well. You can see the weekly is very bearish. We have continued to be walked down by the 9 EMA, and we do still have a gap to fill at around 64.12 on Alibaba. So this is one I'm going to be watching for further downside over the next few weeks as well. Shorter term, we'll watch to see if it can reclaim that 89 level. If it can, we have potential to get back to the 90-91 level. But at the current moment, this is a clean breakdown, so we could see further downside over the next few weeks on this name as well. So those are the 3 bearish setups that I'll be watching this week. Let's touch on 2 potentially bullish setups that I'll be watching in case the market decides to go higher. The first one is Netflix. So if we first look at the daily, we can see a very clean cup and handle formation that is playing out. So first, we obviously have a nice cup formation here. And you can see that we are working on a handle at the current moment as well. Now, cup and handles, for them to actually confirm, they do need to break the prior high. So that would put it a break above 252. If we can break that and the market can be supportive, we can see a move back to 295, which lines up with the prior support zone. Okay, you can even draw it here, 291 to 295. All right, you can make it a channel if you'd like. That could act as new resistance for Netflix. If we can get through there, we do have a full gap fill at around 329 to keep our eye on. But this is a clean cup and handle. Traditionally, these are bullish. If it decides to break down, I think we come back and revisit under 200, probably closer to the 188 level on Netflix. So this is a bullish setup that I am watching. It is looking fairly strong given the overall market right now. So we'll keep an eye on it for a break of 252, potentially to send us to 290s area. Once again, it will have to allow the market to be supportive for this to happen. Given the fact that we have bearish engulfings, I am leaning a little bit more further continuation down for the overall market over the next month. So bullish setups aren't as intriguing to me personally, but if we can clear 252, there is potential for us to push back to 291, 297 level from there. The next potentially bullish setup that I want us to touch on is AMD. Okay, AMD. Now, semiconductors have been getting absolutely smoked recently. Okay, and personally, I still think AMD is working its way down to under $60. But at the current moment, as we enter this week, we are sitting in a very strong demand zone. You can see we've bounced once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, and we are back for the 8th time in this zone. Is this the time we break? Maybe. Is this the time that we bounce for the 8th time? Possibly. So let's touch on both scenarios. First and foremost, I still expect AMD to trade under $60 by year end. Okay, there's a gap to fill here at 64, but I still anticipate AMD to come down about $60 level by year end. If we do get a bounce, you can see there's a very clean gap that we could come up and fill, which would put us back around that $81 to $83 level. Now, at the current moment, there's no signs of reversal just yet. But if we can bounce here, because there is potential that we find buyers off of this previous support right here, we have the potential to bounce back to the $81 to $83 level. If we decide to just break through this demand zone, once again, the target still remains under or around $60, around that $59 level, but we have a gap target of 64 to 62. So at the current moment, if we zoom out just a little bit, we have a very strong descending wedge that we're working on. Okay, if I just clear everything off for you, we have a descending wedge that we are working on. Traditionally, these are bearish, but the question is, do we get a bounce back before we sell through it? Can we potentially break out? Maybe, but traditionally, these do this. Okay, so if we do get a bounce, keep a close eye on that $81 to $83 level before I expect us to test the $60 level by year end. So that's going to be our weekly watch list. That is what I'm watching for going into this week. Once again, it's going to be a very volatile week. All right, we have FOMC on Wednesday. Everything about the market still points downward. Okay, so if we get a bounce, keep a close eye, 395, 396. Still think we're on our way down to 330s, but keep a close eye on that level if we decide to bounce back post FOMC or any other situation that happens over the next few weeks. So that's going to be our weekly watch list. I appreciate you watching this video. If you did make it to the end, please be sure you like, comment, and subscribe. I try to do these every single week in preparation for the market week ahead. My favorite play is to probably take a short on CrowdStrike this week, and also look at Costco, as those are going to be my two main plays that I'm looking at going into this week. Once again, I am carrying over a Deere short sell from last week, so that's still playing out. Still definitely on target for that play as well. So with all that being said, thank you so much for watching. Please like, comment, and subscribe, and I'll catch you on the next one.